is great, but what really matters is, first of all, the fiscal response, and secondly, then getting your long-term economic policy right so that your country is a good place to invest, which is where Brexit comes in. Monetary policy is already so supportive, further tweaks to monetary policy would only make a modest difference.
Yeah, and of course, Holger, it wasn't because of Brexit, but, you know, relatively to other parts of the world, they're in charge, of course, which was my question. Holger Schmieding from Berenberg stays with us. We'll talk a lot more about the Recovery Fund, Poland and Hungary next. Coming up on Bloomberg Surveillance, we speak to the former ECB board member, Benoît Cœuré. That conversation, 10:30 a.m. London time, and this is Bloomberg.
We open position on Swiss franc at 0.89065. That's a long position. So everybody who follow our trades with this strategy, you can purchase at this level. Okay.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, standing defiant, Hungary's Prime Minister Viktor Orban says he won't end his block on the EU's Recovery Fund unless Brussels gives up on trying spending to upholding democratic values. Now, the unrelenting stance is denting hopes for a deal at next week's summit. Well, for more on this, we're joined by our reporter on the ground, Maria Tadeo. Maria, first of all, good morning. Is Orban now doubling down, or could this be a bluff?
Well, Francine, he's definitely doubled down on the idea that he does not like what he sees right now as a compromise, that he wants to further water down the wording around rule of law here. But you can also see that Orban is really feeling the pressure now from the rest of the EU 25 countries that are clearly now saying and signal they could ditch Poland and Hungary if that's what it takes to go for a 25-member state solution, a coalition of the willing to make sure that this recovery fund is ready for 2021. I would also say Orban perhaps also feeling that pressure on that front, gave a very subtle warning to the Polish, saying that the two countries have agreed on a joint position and he is expecting the Poles will stick to their word on that front. I would say there's a lot of pressure on Viktor Orban to water down some of his own demands going into that summit next week, which, by the way, Francine, will be done here in person in Brussels for 2 days, potentially perhaps even entering into a Saturday session that's a lot of the European diplomats have to get over next week.
Thank you so much, Maria Tadeo there in Brussels. I have to say I saw a really funny tweet by someone at BlackRock who used to be in politics, of course, Rupert Harrison, saying, Holger, and we're back with Holger Schmieding from Berenberg, and Holger, what he tweets is like, look, it feels very Christmassy to actually have a fight between the UK and France, and it probably feels also very Christmassy to have a never-ending summit in person in Brussels. When you look, Holger, at all the fight about the Recovery Fund, is this a bluff? Or is this not a bluff? And does it mean that Holland and Hungary and Poland will be left behind? I've just mashed it up and calling them Holland.
Bluff is probably not the right word. I think Hungary is pretty serious about it. The thing is that we don't really need the Hungarians for it. We have at the EU ways to go around the Hungarian or Polish veto. So they are serious about it, especially the Hungarians, but if they remain at their current positions, the EU will go ahead. This will not derail the EU recovery fund, and Hungary is playing it at risk of losing a high-stakes game.
What can the EU do without them? So, explain why high stakes, Holger. What would happen?
The EU can have things where not all member countries have to agree. Remember, the European Central Bank, for instance, the euro is something which is not shared by all 27 EU members. We have other things, Schengen, which is not a travel-free area for the entire EU. So there are arrangements within the EU treaties which would allow for subgroups of countries to go ahead so that the veto of an individual country would not block it. There are various ways to do that, and the EU is exploring these ways at the moment to make sure that the recovery fund will happen. The problem then for Hungary is if the EU goes around the Hungarians, that A, they wouldn't get any money, and that's a lot of money for them at stake in there, and B, that in the domestic political debate in Hungary, it may not go down well, that because the Hungarians want to have political control over their judiciary, they are actually forfeiting money and moving a bit away from the European mainstream. The Hungarians often are the ones who fear that the core Europe around Germany and France, would be the building block for a tighter European Union. And they would actually add to these fears of being left out if, with the veto, they now force the EU in the biggest fiscal project of the EU ever to go ahead without Hungary.
So what you're telling me, Holger, is that basically Hungary would not be a viable member of the EU if they continue vetoing and if the EU go ahead without them.
Well, they are a viable member of the EU, but they would be left out of, say, the most juicy bit of the EU at the moment, which is this fund. Again, we have in the EU various degrees of integration. There are some members who are not part of the euro. They don't have to. It's their choice. And if Hungary chooses to be outside the fiscal integration, they could, like some countries have chosen to be outside the monetary integration, they could do so, but the Hungarians would lose a lot of money and a lot of reputation by doing so.
I think, Holger, behind you is a beautiful map of parts of Germany, which is, where you're talking to us from. And I think there's Berlin, and I can even see some of the River Spree behind you, if my eyes don't fail me. I know you've moved to Berlin. Overall, Brexit or no Brexit, deal or no deal, at this point, will London suffer because people have moved out to other financial centers?
Yes, London will not suffer very much because of people moving out to other financial centers. That is a modest point, but overall the UK and its capital, London, are already suffering by having less trend growth than before the referendum, by lagging behind the European continent on many counts. Before the referendum, the UK was often ahead of the European continent. Now they lag behind in terms of business investment, in terms of trend growth, probably relative to a few countries on the continent. It is not one big price to be paid at one time, but year by year by year, the UK is losing a few opportunities which it would have had if it had decided to stay in the EU. It's a free choice, but it comes at a cost.
Holger, thank you so much, as always, for a fun conversation. Holger Schmieding, their chief economist at Berenberg. Now, coming up, as the U.S. grapples with record coronavirus cases, President-elect Biden says he'll ask all Americans to wear a mask for 100 days. More on that next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now to vaccine concerns, and the S&P 500 slipped amid a report that Pfizer had scaled back its COVID-19 vaccine production targets earlier this year after running into difficulties securing all the materials it needed. Now, the group has already cut its production goal to 50 million doses in November. A spokesperson for the company released a statement saying the scale up of the raw material supply chain took longer than expected. Let's get more with our Sam Fazeli, our Bloomberg Intelligence senior pharmaceutical analyst, who's been wise when it comes to all matters COVID. Sam, thank you for joining us. What does this mean? That it's going to be more difficult for everyone to get hold of these raw materials, or could it be a specific problem for Pfizer?
Good morning, Francine. So obviously the raw materials that are used, we don't know exactly which ones they are, but whatever they are, they're likely to be the similar ones that are used by Moderna. But the difference here is that Moderna never really promised a specific dose number. They have always said something like 500 million to 1 billion doses in 2021. And just very recently there were questions on that. Why can't you commit? And they specifically said, literally used the words raw materials. We don't know how this is going to pan out, so we just have to be realistic about it. What it does mean is that we need to make sure that other vaccines that don't necessarily have the same raw materials or use less of them make it through. Well, obviously that needs clinical data.
Anthony Fauci, Sam, has also slammed the UK's drug regulator, I think intimating that it rushed to clear the vaccine. That, I guess, what does that do? Does it mean that they went too fast, or does it just hinder public confidence in regulators?
Yeah, but he did walk that back a little bit after another interview with the BBC. I don't know what level of knowledge Dr. Fauci, for whom I have an enormous amount of respect, has of the MHRA process. I think what he then said in his latest remarks was that he didn't mean that they did anything wrong, but that the U.S. has a different process. But we know that already. The U.S. asks for every single data point, a raw data point, to come through, and they analyze it themselves. European and US and UK regulators have not traditionally done that. So it's faster.
All right. Yeah. Okay, Sam, thank you so much. That really clears things up, and we'll talk to Sam also a little bit later to talk more about these vaccines and the safety of them. Sam Fazeli of Bloomberg Intelligence. Now, European energy stocks are leading the charge this morning as OPEC Plus finds its way to a compromise on oil cuts. Up next, more market commentary. This is Bloomberg.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Okay, guys, I'm placing a stop on profit for swissie at 0.908985. Okay, so you need to place your stop on profit at this level.
Or not, whether he's missed it or not. So something that we're keeping an eye on is certainly Brexit negotiations. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine, and I'm going to start with Brexit. So Brexit trade talks said to be on the verge of a breakthrough have hit a last-minute bump. The British government said the prospects of an imminent deal had been receded, blaming the European Union for suddenly turning up with a new set of demands. Senior figures close to the European side questioned whether the remarks were intended to pile last-minute pressure on the talks. Now, Hungary's Prime Minister says he won't end his block on the EU budget and virus rescue package unless Brussels drops its tie to upholding democratic values. Viktor Orban reiterated an agreement between his nation and Poland to hold up the budget. The comments dent the prospects of a deal at the EU summit next week. The UK granted 5 passports a minute to Hong Kong residents during the month of October. According to data provided by the UK Passport Office, more than 216,000 Hong Kongers received British national overseas passports during the first 10 months of the year. That was the highest annual figure stretching back to the 1997 handover. Anthony Fauci, the US government's top infectious disease specialist, has rowed back on earlier criticism of the UK's rapid approval of the COVID vaccine. He said he didn't need to imply any sloppiness after describing the UK...
Okay, a closed position on swissie at 0.989085.
A day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Francine.
Leanne, thank you so much. I have to say, all the conversations in every cab in London is about whether you'd get the vaccine or not and what would it take for you to get it and when available it is. Now let's go back to the markets. And November was one of the best months ever for equities as vaccine boosted equities. So what does the rest of the year and 2021 hold? Well, joining us now is Toby Nangle, Global Head of Asset Allocation at Columbia Threadneedle. Toby, thank you so much. It's been a long week, so apologies for that, but happy Friday. When you look at equities and the bull run that we've seen and actually the records that we've had, is all the good news now priced in?
It's a $1 trillion question there. I mean, valuations are certainly quite high when we look at them in absolute terms. But when we look at them compared to other markets, when we think about the rate environment out there, and we think about the greater level of certainty that's coming through with vaccine being rolled out and the kind of economic rebound that we envisage, and actually we find some quite good pockets of value around the market.
Where do you see that value, Toby? And actually, and is this on the presumption that we get a vaccine and that it's rolled out safely and that a critical mass will take it?
Yeah, so I mean, we, like probably most people, had a vaccine in our forecast for coming through in 2021, and the real big positive surprise has been the high efficacy of a couple of vaccines come through. To be honest, I'm not going to get sort of hung up on